Well, it is a new year and a new decade, and there's no doubt most of us will be making New Year's resolutions, among them setting some financial goals. Well, this could range from tackling your debt to building your retirement. I sat down with Matt Farkas, the head of fixed income at Germain Investments in Springfield, who offers his thoughts on personal finances in 2020. And full disclosure, Germain Investments are a sponsor of WGBY's Murrow Gala event.
Fidelity Investments put out a study late in the year last year that took a look at financial New Year's resolutions. And there are basically three main themes that came through. People generally want to spend less, pay down debt, and save more. Those are really the three main goals that people want to accomplish in terms of New Year's resolutions. When I look at that, it really comes down to a sound budget. And that's really the foundation for all of those goals, accomplishing all those goals. And when you look at your budget, there's really three things you have to know. You have to know how much you make, after all, taxes, withholdings, etc. How much you spend and how much you save. You might be surprised how many people don't know how much they spend. It's a pretty common thing that people just get their check and spend their check and not really think about where their money's going. So my advice for people in a situation where they might want to improve their self financially is get their budget in place, and the first step in doing that is really just monitoring your spending.
I think a budget can be frightening, to be honest with you.
Sure.
I think
Yeah.
you look at it, of course it's necessary, but when you're talking about a budget, you're also looking at how much you owe and actually writing out your debt on paper for some people can be alarming. But how do you do that knowing that, okay, this is going to help me in 2020?
Yeah. So my advice would be just not worry about making changes at first. The very first step is watching where your money's going. So you can do this monitoring on a spreadsheet, or there are a lot of free online tools that are out there, budget trackers that you can utilize to just monitor where each penny's going. And once you have an idea where your funds are going, and I would, watch this, not a day or a week, but really watch it for, I would say, at least a month, maybe a couple of months. And once you have an idea where your funds are going, then you can really identify areas that maybe you have a little leakage. Maybe you're going out to eat too much. Maybe you have subscriptions to different services that you don't really utilize anymore.
Those add up. And
those do add up. So if you can identify those areas, or maybe you can tighten your belt a little bit, and then you can use those savings, if you will, to accomplish goals of paying down debt or saving a little bit more. So that's really the number one place to start.
Let's talk about paying down debt, because obviously, we just come off the holidays. People probably spent more than they would have liked. That can be a little bit overwhelming. Do you start with the smallest amount first? Do you start with your college loans or the car or the house? How do you attack that?
Yeah. So there are different schools of thought in terms of how to, attack debt, if you will. Some will say, go after your smallest balance first. Pay that smallest balance down first to get that psychological reward of getting one off the books, if you will, because that can be rewarding psychologically, and it can encourage you to keep going. I would encourage people to look at it a little bit differently and really look at each interest rate and what they're paying for each debt that they have. Typically, for most people, their highest interest rate is on their credit cards. So I would encourage people to pay the minimum on their outstanding debt from the lowest rate and then on the highest interest rate, you really want to pay that one down first most aggressively. So again, when you're looking at your debt, you want to pay your highest interest rate debt first, pay that down as quickly as you can, and then move down to the next rate highest, and then et cetera, et cetera.
What about refinancing? Because I know that the mortgage rates are still pretty low, and I'm not sure what they're going to do in 2020. Is this a good time to think about that? Do you roll in your credit cards, or do you have to be careful with that?
Mortgage rates are right near all-time lows. So if you're in the situation where you can refinance, I certainly would encourage you to look at that. If you can bring your mortgage rate down from in the 5s to in the 3s where they are today, I think that's going to make a lot of sense for most people to do that.
So a lot of momentum in 2019 as far as the stock market, record highs with the Dow over 28,000.
Yeah.
That's good news for investors if you're thinking about retirement as well. What's the investment strategy as we head to a new decade?
Yeah, 2019 was an unbelievable year. The stock market did very well, the bond market did very well, it was a year basically where everything worked. We know, we really want to sit and enjoy 2019 because it was a great year, but we know not every year is going to be like 2019. That said, I would say for the average person out there, really don't think too much about forecasting the future and what's going to happen year to year in the stock market. It's really hard to do, if not impossible, for professionals that do this for a living. Never mind the average person that may be doing it, between working and other things that they have in their life. So you really need to focus on what you can control. So if it's in your 401k, for instance, at work, focus on things like your asset allocation. What's your mix of stocks, bonds, and cash? Does that risk level line up with what you can handle and what you should be doing? Is it appropriate for your situation? Are the funds that you're using, are they appropriate? Are they tend to be a lower cost? Some people can do this kind of thing by themselves or kind of go to loaners. Because there's a lot of material available out there for people to do it themselves. For those people that can't do it themselves or want a professional's hand, reach out to a qualified investment professional, someone that maybe has some tenure in the business, has a credential, maybe a CFA, Chartered Financial Analyst designation, or a CFP designation, Certified Financial Planner. Because a professional can help steer you and help you navigate and maybe help you achieve your long-term goals.
So we talked a little bit about retirement, but college savings is a big issue for so many people, and you look at college debt here, and that's another big story. How do people continue to save for college? Because some people might kind of feel like they have to wave the white flag if they haven't started, and their child is maybe 10 or 11 years old. Do you encourage them in 2020 to still put a little money aside if they can?
Yeah, if they can afford to, in my view, it's never too late to start saving for college. Each dollar can help. It can help, especially if the child still has some years before they start going to college. You still have time to compound those assets. So, it does help to save early, but if you've waited a few years, it's not too late. 2020 could be the year for you to start a 529 plan.
And even like $20 a week, $50 a month, it doesn't sound like it's a lot of money, but over time, that's going to make a difference.
Absolutely. Save what you can, even if it is $10 a pay period or $50 a month. It may seem nominal, but over time, it does compound, and then you get the market behind you to help those dollars really add up for you.
So there was a study by Career Builder, this was a 2017 study, that showed that nearly 80% of people live paycheck to paycheck. And certainly when government shutdowns happen, we see the ramifications of that. How do you encourage people to build that rainy day fund? I know we're talking about retirement, but just to have a little bit of money in the bank in the event that paycheck doesn't come.
It really does come down to sound budgeting, knowing how much you're making, knowing where your dollars are going. And at first, but once you know where your dollars are going, you can start with those smaller items. You can start with, maybe I go out to eat a little bit less. Maybe I don't go out and buy my coffee and I keep that, buy at home or make it at home rather. You can start making some small changes, which really do add up over time. And then once you start with those small things, I would encourage you to look at the bigger items in your life, because those tend to be the items where people get themselves into trouble. Vehicles is a common thing that people typically spend too much and buy a vehicle that they can't afford. And that's an area that I often tell people, maybe you buy a used car, because if you can bring your payment from $600 a month to $300 a month, those $300 a month can make a big difference, especially over time.